Alright, so today to start off today's session, I'm going to do the homework that Adrian has assigned all of us in the premium chat. If you don't know what that is, I urge you to go look at it now. I will also share the link here in this chat. And I'm just going to show you guys how you would do this homework assignment if you were doing it on your own. I do something very similar to this anyway, so I'm happy to do it. I think it's a great exercise, although I have been doing the weekly reviews with Adrian on Thursdays at 7 p.m. If you guys haven't been there, we've been reviewing the day, we've been reviewing the week, and then we've been forecasting the week ahead. And so far on the reviews and forecasts that we've done, 2 for 2. Like, the forecast does typically play out exactly the way we mapped it out in those 2 times. So anyway, let me also post the homework here on the screen so those who are watching this in hindsight can see what I'm referring to. Alright, so this is the homework assignment here for everyone watching the recording. We are going to first go beyond the 1 hour time frame. We're going to mark out each daily midnight level, or TDO, with a vertical line that separates the days. Then we're going to draw a horizontal line at the same level, label it TDO. Add a note for each high of the day and low of the day, as well as the time that it occurred. Mark out the Monday changes day of delivery. Draw on the standard deviation from the swing. Draw a horizontal line at 1.5, 2.5, 3.5, 4.5. Add fib levels for the weekly candle 20, 30, and 50 to measure TGIF. So this is the fib levels. Use the PO3 indicator to set the weekly. Save the chart in your own Discord library under Market Maker Sell Model. Week Monday high, Friday low. Yeah, this is classic price action that you would want to study. Cozy is not here. I wonder where she is. I'm not gonna say what I think she would be doing. Okay. All right, so does anyone have any questions about that homework? This is actually a very classic homework assignment that, again, I've done over and over and over again in my career. I'm going to start with a blank chart, completely nothing on, so that I don't have any of my defaults to set this to. Maybe what we can go over after the homework is how to set indicators to do all of this for you, because I already have all my indicators doing this for me. So, to walk you through this, we're just going to do a blank chart. Feel free to participate, guys. This isn't only you watching me. This is us being interactive with one another. I'm a student alongside you, So anyway, back in the day, not so far back in the day, but I'm going to show you guys what my OG backtesting looked like from maybe 2022, as early as 2022. So I have a section in my journal called Putting Lipstick on the Pig, and that's exactly, this homework assignment looks exactly like that. Let me just find the homework that I'm referring to and I will show you what I mean really quick. Okay, yeah, here. And unfortunately can't see the asset, but open link. Okay, here we go. So see, I did the same exact thing, just a little bit more going on here than just that, but basically what I did was I marked out midnight, which is these white lines. Then I also marked out midnight going across, and then these red lines, this is Asia. Asia's yellow, London's red, New York is blue. And then, this is also Asia high and low, but midnight horizontally, midnight across. I don't have the deviations on this particular page, but I look at the date, December 28th, 2022. So this is really classic homework that everyone should be doing. I think at a minimum for a weekly review or even a weekly forecast, this is a really super good exercise to do. So first we're going to start off on the 1 hour chart. And we will go to the beginning, Sunday, and we will press Alt V. And that will add your horizontal line. That is on the wrong time. And we just go for doing it on all the midnight levels, midnight hours. Tuesday, Wednesday. Wait, what am I doing? This is 2 weeks ago. Okay, sorry. Sunday 18th. There we go. My bad. Thursday midnight. Friday midnight. Okay, easy peasy, right? Then we go through and we grab the midnight open. So I don't think Adrian was specific on that in the homework. So you do want to grab the open if it's not obvious. And you just drag that across, and we're going to label that TDO, which I don't have saved on my trading view template. I have it on my FX replay template. Wait. Okay, yeah, there we go. To save this as a template, you right click, template, save as. I think I have... Wow, I don't even have midnight anymore. Okay. So save as TDO. That way, every time you go through, you just go to the open, drag it across, template, right click, template, TDO. Same thing. Midnight, open, drag it across to Thursday, midnight, TDO. And if you're not at home doing this homework assignment simultaneously, you probably should if you could. If you have that ability. If you're on your phone just listening to the lovely sound of my voice, completely understand. Open, drag it across. If you're not sure, you know, provided that maybe some of you are new, if you're not sure how to grab the open of midnight, on the up close candle it would be the body low, on the down close candle it would be the body high. You can confirm by hovering over that candle and looking at the price that you're selecting and referring to the price up here. So I can click on this line, not open. This is 951.50, and the open when I hover over it is in this top corner, and 951.50. Okay. Now from here, our next step was to we've marked out each TDO vertical, we've separated the days, we've drawn a horizontal line at each TDO level to label it TDO, and now we're going to add a note for the high of day and low of day and the times that they've occurred. So I have another homework assignment like this in my journal. I'm just showing this to you guys to prove that we walk the talk. We don't just not do what we're telling you to do. So give me one moment to find an example if I can find it. Yeah, so I have another example of this here. I'm not showing you the entire week, but I do it for the day. So Asia range high, low, London high, London low, New York low, high, right? And okay, I don't have it on this specific sheet. Let me just find a better example really quick. Let me click on another random day. And okay, yeah, this is good. This here, oops. This here, I have New York high of day, and London low of day, or sorry, New York low of day. So I'm also showing that that is the high and day set for the day, and at what times they were set. And this is done, my homework was done on the 15-minute chart. So again, just showing you the examples that, you know, this is homework that everyone should be doing. All right. Would it be better to have these horizontal lines extend to the right or leave it as 1 day? I would leave it as 1 day. I encourage study of watching those levels throughout the week though, for sure. You will see. But no, it's just a day because you're looking at the the point of it is that we're looking for the manipulation above midnight for each day. That's why we're marking it day to day. Otherwise, we would just see 5 TDOs and we wouldn't know what TDO it's referring to. But no, PI trader, that's not correct. All right, so the next thing we're doing is high of day and low of day and the times that they're noting. So I like to use a call out for this. You don't necessarily have to use a call out for this, but it's very simple to mark out. You can also just use lines. That's the OG way that I used to do it. So for example, this previous day high, previous day low, or you can change this to say high of day, low of day. I'm going to use the call out instead. So here, high of day 10 a.m. Low of day 1500. And again, if you are not doing this at home, I think it's a good idea if you have the ability to at the same time. Low of day 10 a.m. High of day 1500. Low of day 11 a.m. High of day 1500. Already do you see a reoccurring theme? Ooh, this is interesting. High of day 12 a.m. I'm actually gonna put midnight TDO. Or what? That's spicy. That is really spicy. Ooh. And wow, I had not noticed that Thursday morning or Thursday night when we went over the review. Low of day 1400. Wait, what happened to my call out? Oops. High of day 1500. Let me just confirm this. Can't tell with the naked eye sometimes. Okay. And low of day 1100. Okay. So nice and simple. Now look at the recurring theme here. 10 a.m. to 1500, 10 a.m. to 1500, 1100 to 1500. This is the exception. Midnight TDO to 1400. But look at when we make the high in New York, the retracement is at 10 a.m. Recurring theme here. And then low of day 1100, 1500. Sorry, hold on. Let me make everything consistent here. Let me just do military for all of them. Okay. 1 second. Let me have some coffee. All right, so next on the homework assignment, we drew high of day, low of day, along with the time. That's important, the time. Now we're gonna mark out the Monday change in state of delivery. So the Monday change in state of delivery. And oops, can't look too soon. No, I like this one better actually. Yeah, that's when we actually close. Okay. Sorry, hold on. Monday CSD. Draw the standard deviation from the swing. Draw a horizontal line at 1. Okay, I need to pop up all my halves. So I don't need that half. Actually, I'll just keep that on. 3, 3.5, and I need 4.5. Okay. Now we're gonna draw a horizontal line from 1.5. Come on, Poppy. Sorry, I have to get this right on. There we go. And this we will draw all the way across. I'll drag them across in a second. Okay, no, I drew them all the way. Yeah, okay. 3.5. And 4.5. Okay. So 1.5, 2.5, 3.5, 4.5. What these zones are known as are reaccumulation or redistribution levels. Reaccumulation in a buy model and redistribution in the sell model. Oops. Add the fib levels for the weekly candle, TGIF, and then set the PO3 indicator to the weekly. Okay, so we will grab the entire weekly range here, and I think I'm doing it in the right direction for the way I have mine set. I already have, okay, no, I did it wrong. I have the indicator set already for TGIF. These are the settings here. So I have it set to, I have the quarter on as well, or I have the quarters on as well. We can just remove that. He's requesting that we have the 2, 30, and 50, 20, 30, and 50. Let me bring that back up for you. 20, 30, 50 to measure TGIF. So I will also turn on the levels like this, and I will change these to values. Or no, the percentages are better because they match what he say. And then I will drag this all the way across to 293. Let's start there. Okay. So this is the weekly range from here to here, or sorry, to the low here. I'm gonna put this to the side. And what I'll do is just so that I don't know, it's clear to the eye, I'll do a dashed line all the way across to it, so that people can see where that level is derived from. Okay. Alright, what do you guys think so far? Any thoughts on this process? Isn't it so super wicked clean? And then now, after that, set the PO3 indicator to weekly. So if you don't have PO3, I will show you what to use. If you want to get the PO3 indicator, feel free to use our codes. Mine is I'm just 21. It should get you a 20% discount. And sorry, my brain. There we go. PO3. So I'm going to remove the table. Then we are going to have this set to weekly profile. So this is the easy way to do it. This is T-Trade section of the indicator. You just click the show profiling button here, and it'll turn it to the weekly candle. And sure, hold on, visibility, yes. Where are my candles at? There we go. Oops. We also set this to the week. Showing. It's not thinking fast enough. Oops. Why is it showing me the day? 1 week. How did I get the dates? What dates? Oh, sorry. Here we go. So double click on the line. And you should see time label, and you just need that to be checked off. Vinay. Okay, hold on a second, guys. Maybe I remove that. And then when I remove that, okay, there we go. Never mind. So you don't use it when you're looking in hindsight, you don't use the T-trades. In real time, it usually changes all the 5 candles into this one candle. Okay. So this is what your homework assignment was. This is what you're doing. So this is I'm gonna change this really quick to the market maker template that I have, right? So on this template, you're seeing the same exact thing that was on the previous, except we have the labels now with it. So, and I'll just adjust these slightly here so that it makes sense for what we're doing. And there's no confusion. Okay. So, oops. All right. So we have the accumulation. I just want to check something here for myself. Oh, we miss it. Interesting. All right, so oh, sorry. Let me show you the free version of this really quick too while I'm on it. So for here, for the weekly candle, if you don't have the PO3 indicator and you don't want to buy it, look for a higher time frame candle. Uh-oh. I don't have it saved as my favorite anymore. Higher time frame candle by Fadi. ICT higher time frame candle. Sorry, it's this one here. So ICT HTF candles. Let me just favorite it again. And then when you do this, the settings in this are basically the same. You click into it and you would just select the 1 time frame. And then you would go to the 1 week, and then you would just, change your colors to look like your chart. Why is it only limit to higher time frames 1? Custom daily candle midnight added. I don't know why it looks like this. Maybe I added 2. Yeah, I added 2. There we go. Oh, that's interesting. That's new. That's a new feature, that when you have multiple 1 week. We'll just set this to 1. There we go. So see, same thing. You get the same type of feature here. I am a 2 Degrees affiliate, so use my link, use 2 Degrees. I recommend it. Support creators of ICT indicators. Okay, so we get to the 1.5 deviation. We trade down to it, and then we accumulate, distribute down to the 2.5, and then we again large accumulation, and then we come back, or sorry, then we drop down to the 3.5, and again we accumulate, and we drop down to 4.5 in reverse, which would be known as the SMR. I wouldn't be surprised here if there was SMT between some of these swings. So we have first this one is occurring. Oh, that is the SMT. So hold on, let me show you. We have this here. Oh wait, no, it didn't. It did an SMT, but to the eye it did. That low to this low. Okay, the SMT is with YM on this one. Do we have lows here? Do we have SMT here? No, all of them created the lower low. So it's just this one. Hold on a second. Am I missing something? I'm not. This is RTY down here. I just keep it up for reference. Okay, no. So it's just this low here that we have the SMT at. And then it drops down to 4.5. And I'm just checking the other swings. No. Wow, they all look the same. So this is rare. Usually there's 2 instances of SMT. So there'll be, for example, there'll be like one here to here, which they all make the higher high here. And then there'll be another instance here to here. But I generally look for that second SMT in like from, so if we have the SMT here to here, I would expect another SMT here to form at some point. There's SMT in the candles. Okay, sorry. Sidetracked there. Okay, so this is the homework assignment. So now we're done. I'm just gonna zoom into just this week. And then now I just added a little bit more of context to the fib so that, you know, for those of you that don't know, you can do that. You can do that. As well as, oh, sorry. And then Friday, let's go over that. We drop down to 4.5. And then where do we return to? We return to 30% TGIF. So now let's copy this image. You mentioned we can draw these using an indicator. Which indicator do we use? Yep, I'm gonna go over that next. So let's save this chart first. We're going to copy the image and you're going to paste this in your journal underneath market maker sell model. So I will show you where this is in my journal. So I have a section of charts. I have market maker models and I have them in threads here. So I'm going to do market maker sell model, paste it here with Monday high of week, Friday low of week. I think that was all he wanted us to label, right? Discord and the market maker sell model, Monday high, Friday low. Okay, so Friday, Monday, let me do high. Monday high, Friday low. Okay. Now, let's clear the charts here and I will show you. No worries, Jerry. No offense taken. I'm going to clear the charts and I'm going to show you how to do this with an indicator. Does anyone have questions about any of this before we move forward? Or questions about anything Okay, so I'm gonna delete this. Yes, I'm gonna keep the indicator on just because we are still going to use that. The next indicator that we're going to pop on here is free, and it'll be kill zones and pivots. Now, my default settings may pop up. Okay, they don't. Alright, so I'm just gonna double click on the indicator if it lets me. It's not letting me. Alright. What's happening here? Okay. Oh, I guess I can't click out. Alright, so I'm going to remove the sessions. And I'm going to bump this up to an hour. So your time frame limit, you want to be able to see it on your hourly chart. And then I'm going to set this all the way up to 5 sessions, maybe 6, just to be safe, so it doesn't eliminate Monday. All right, and normal, text color, draw cutoff time. Okay, so now we're gonna scroll all the way down to the bottom, or sorry, about midway. Oh, there we go. We have unlimited here, and we're going to set the high and lows. Okay, and we're just gonna set this all to one color. So we'll set this to like black. Oh, sorry, just the daily highs and lows. My bad. I'm spacing a little bit. Yeah. So daily highs and lows. Okay, so you see it's marking every previous day high. So see here it is marking out Friday's previous day high. So I'm going to change this to 5. Oh, sorry, it's unlimited. That's why. I can't clean that up because it's unlimited. So note here though that it is marking out the previous day and it's not marking it out on the day, right? So that should still be easy to see once we add the separators. So the separators will do it at 6 p.m. So we're not going to use these separators here. We're going to scroll down to these, and you're going to use opening prices, and I already have mine set. So you would set the minute of 0 because it's doing it by the 1 minute candle. So 00 to 01, right? So that's the 1 minute candle of that midnight opening price, and that's what's going to be delineated here. And then for your timestamps down here, you're going to do the same thing, 00 to 01, and you will click that, right? So now what you will see is basically the same rendition, slightly different in that your daily highs are drawn through to the next day. Okay, so it's not drawn to midnight of the next day, it's drawn through to the 6 p.m. close. Yeah, I wonder if I can I should actually ask. Yeah, I'm gonna ask. There's another indicator that does it. Hold on a second. Let me just be thorough here. I can probably ask TFO to change this, but there's another indicator that will do it. No, it doesn't. It still does it in previous day highs and lows. Okay, never mind. I take that back. So the previous day's highs and lows, they'll just have to be drawn through to the next day like this, unfortunately. But I can maybe ask him if he can change it to that. You know, we have this. Another way you can possibly do it is if you opted to use your sessions. So for example, I'm just going to select 1. Hopefully it doesn't change all my settings, right? And I'm going to change this from midnight to midnight. 0, that's probably going to be the cleanest way to do it, to 0. No, that's not right. Learning curve. Let's go 23 to 23:59. 0 to 23:59. Okay, I'm going to remove the boxes and remove the text. And the lines are not there. So sorry, I probably did this backwards. No, because then that would be, hold on a second. Okay, let me think about this. 0 should be right. Let me try it the other way around. To 0, 0. That would be 1 minute. Okay, no. I'm thinking of this the right way, right? Yeah, I am thinking of this the right way. Show pivots, alert, once mitigated, pivots until midnight. Oh, until mitigated. For most recent for all. Okay, I apologize. I thought we could pull it off with this. Okay, let me do it this way. 01. Let me try that. 01. Yeah, there we go. That works. Because we're on the hourly charts, right? Okay, yeah, that works. This works. Okay, so now I'm just going to remove the box. The lines will remain. We're going to change the label to... Ooh, we can't use previous day, high or low. I'll just delete the label. How about that? No label. Okay, it's not removing the label. Let me remove these labels. It's not thinking fast enough for me today. Daily. Still not doing it. Display text. Daily. There we go. Oh, wait. Huh. Labels. Oh, those labels. Sorry, I did tables, not labels. Alright, and then we're going to change that to black as well. And I'm going to remove previous day high and low down here. So I'll remove those highs and lows. And so see, there we go. And now what that does is that delineates the high and low of day in line form, right? You still have to go through and label them, apparently. But that's basically everything now. So we have the separators on the days, so it's on midnight, right? We have the names of the days already locked into the indicator. What we can do here, we can change also where the... Oh, sorry, Ali, I missed your drawing cutoff time comment. You can offset the names of the days as well. So, label... I'm gonna find it. Hold on. I haven't gone through... I saved my settings and then I set it and forget it. Kill range, day of week, hide. Okay, there we go. So at midnight you can change this to midday so that they're in the middle. There we go. So now you have Monday, Tuesday, Wednesday, Thursday, right? And now you have your high of day set, and you would just have to go through and say what time this is happening. So 9 a.m. Am I drunk here? What's happening? Okay, hold on a second. I did something wrong on the homework assignments. So 9 a.m. 1500. Again, you can use the call out button. You can also just use a simple text, right? You can just do, oops, 1500. Didn't realize it was that big. And there you go. A lot of different ways you can do this to make this aesthetically pleasing for yourself. 10 a.m. And whatever you do, just, you know, use some consistency in the way that you're labeling. Like, you guys saw me earlier. I changed this to be all military time instead of using AM and PM. And then let's say you're on all free indicators. We'll just delete PO3 really quick. We'll bring up higher time frame, higher ICT higher time frame candles by body. And we will remove all of these guys. We'll change this to 1 week only, and we'll just do the one candle. And we'll change this to look like my chart. Up close candle, down close candle, borders and wicks, and padding a spine with the spine, label, no remaining time, that's what the NA is, and we're good to go. there. And now you have exactly what we drew out manually, except with the indicator. And what you can do to make this easy for yourself as far as doing your homework. Now again, excuse me, you still would have to come through and add the manual times, right? So you are still seeing some form of, you know, what's happening. But you can click on these 4 boxes here. Sorry, let me rewind. You would have to add the times and you would have to add the deviations. So for the deviations, I'll pull this swing here for you so you can see my settings if you're not familiar with these settings. So your settings would have everything from 0 to 1, which I don't have checked. I don't know why. 0 to 1. You don't need 0.5. You also don't need negative 0.5 technically for this context, for the context of the 1 hour homework. And then you're just gonna go in half increments from 1 all the way up through 5 if you want. And then from there, what you can do if you want to label them is you just click in the middle of these lines and you would name them accumulation distribution if you want. You don't have to. And then once you have this saved the way you want it to be, you do the same thing. Oops. For those of you that already know how to do this, thank you for your patience. Obviously, I'm doing this for the people that may not know how to do this. AD, you right click the Spella template, save as, and then you name it whatever you want. You can do I don't know, weekly profile, SDs. I already have a ton of these templates, so I have everything I could possibly want from this. I'll just do homework, for example, right? That way, every time you pull up a fib, if it happens to be on something else, you just go to template and you go down to homework and it'll bring it up the same exact way that you saved it. All right. And then after pulling up your fibs, you would also do TGIF. If anyone needs me to slow down or to redo anything, let me know. So again, I also have this template saved. So right click template and TGIF if you need the settings for that. My settings look like this. For the context of homework, all you need is the 20, 30, and 50, 0, 1. So you can put them all on one side. They don't necessarily need to be on opposite sides. And you would just have your levels checked off so that you can see the levels as well, right? And then we just bring this forward. 295. I'll put this at like 297. Okay, still not far enough. I'll move this. I'll bump this out over to the weekly candle. All right. And then again, you're still coming through and you're marking out your daily highs and lows, and then your homework would be complete. Now to save this as a template with your indicator set the same exact way, and this is all free indicators, so everyone will have access to do this. You would go up to these 4 little boxes. Excuse me. You go up to these 4 little boxes here and you click on this guy and you click save indicator template. So again, you can see that I have a bunch of indicator templates set already. I'm going to save this indicator template as 1H homework, and you will remember the interval because it'll always be on the 1 hour chart, and then we will click save. All right, so now let me just show you. I will delete all of everything. And I will then, when I want to do my homework, I'll go back to the 4 little boxes and I'll click 1H homework and it will show up the same exact way. And just to show you that this is not a fluke, we'll go back to somewhere here. Let's click through just to finish off the week. Thursday, Friday. We're almost there. Friday. Wow. There we go. Okay, so I'll just click through the 1 bar. Again, 4 boxes, 1H homework, and it'll do the same exact thing. Pretty, pretty, pretty. And again, you do the same homework. So you come through, you find your Monday manipulation like this. And or your manipulation in Monday if you have one. You basically just look for the manipulation at high of week, right? If it doesn't apply to this context, You select your homework fib, then you draw your line. Same way. We'll just draw it all the way through. I would just draw it to the line. For cleanliness, you can draw it to just the point in which it was actually mitigated. For added context, if you just want to clean it up just a little tiny bit. And I think this is this all looks familiar, right? So me and Adrian probably also went through this together at some point, but you would draw your lines like this up until the point that it's mitigated, and then all the same thing over again. Any questions? Does everyone like that? Did everyone gain value from that? I think we covered everything, right? There's nothing missing from the homework assignment with everything set the way it's set. So you got your fib levels, you got your, for the deviations, you got your fib levels for the TGIF, you have the indicators to set your daily highs and lows, you also have the day separators all together, and then you also have your weekly candle. And every single week, if you review this, you will know as the weekly candle plays out in real time, you will start to understand, okay, the high of week is in. Now that the high of week is in, I can trade tomorrow with just this one bias. You don't have to, obviously, but if you're at the point where you maybe want to reduce losses and maximize your wins, you can start to trade with a bias and only take trades in the direction of the weekly candle, which is how, generally speaking, all ICT traders trade. Can you help to analyze this and how we use this going forward? Yep, I just kind of actually went over that while you were typing this, Vinay. So for example, what I would do is, so again, if you do this every single week, you'll start to have an idea of how the weekly candle is forming on the 1 hour chart, right? So the weekly open on Sunday technically is here. The weekly open is here, right? This doesn't need to be delineated because as ICT traders, we do harp on midnight to midnight, but you're watching every single day for a manipulation to occur above midnight, right? So, oh wait, we don't have our midnight. Do we have a midnight? Yeah, we do have, sorry, it's this dotted line. Let me change this to be a little bit darker so that I can see it. So going down to this guy right here, I'm going to just bump this up to 2 so that these dotted lines become more apparent so that we can see the midnight levels. Every single day, you're looking for a manipulation above midnight, okay? So if you are not familiar with what a manipulation swing looks like, this is going to help with you being able to recognize these manipulations, right? So you're basically just looking for like price to trade above midnight and price to trade back down for simplicity's sake, right? And the best way to kind of go through this would be to go to Adrian's change in state of delivery lesson within his mentorship, which I will link to you guys in the chat momentarily. It is the first homework assignment. Here it is for those of you that are new to the server and have not done this homework assignment. So every single day we can go in, and once you see that manipulation above midnight and price trades above it and back below it, you can draw that manipulation out. Same thing here, midnight open, we trade above it, and then we trade back down, and I'm going to draw that manipulation out. And so daily, for day traders, you can watch midnight and wait for the change in state of delivery to occur above or around midnight, right? Or below and around midnight. We'll go to a context. In fact, you know what? We'll just spend the day going through charts doing this homework, okay? We'll pick any asset and we'll just go and do this with these indicators as is. So now, as you go through every single day, you're basically looking for confirmation as each of these deviations are hit. Now for the weekly candle, you're generally working off the very highest manipulation of the week. So for example, here we have Tuesday high holding, right? So I would just keep this manipulation or this specific deviation on my chart until it's sought out, until it's achieved, until it's realized, right? So here I drew out the lines already, but you have 1.5, 2.5, 4.5. So Tuesday comes in, we hit 1.5, and we reaccumulate. Why do I know it's a reaccumulation? Because we're consolidating within that price action after hitting 1.5. Consolidating is what? In simple terms, with no complications, we're trading inside the same exact range that was created. We have a high and a low set from here to here, right? And let me just see. Let me use a box instead. So we have a high and low. This is one of the easiest ways to kind of paint this for you. You have a high and low set. As we trade forward in price, we are still within that range. As we trade forward in price, we are still within that range. As we trade forward in price, we are still in that range. We are consolidating. This is consolidation, if you don't know how to recognize it in simplistic forms. Then you draw it forward again. We are still in that range, right? And then as we draw forward, look at that. Coincidentally, we get below equilibrium, we respect equilibrium, and then we distribute down again, right? So then as we distribute, we go on to hit our other deviations. So this is rare, but in this instance we do hit 2.5 and 3.5 in the same leg, of price action. And then what do? We accumulate. So now we have this new range set. We have a new high and low created from our deviations, right? And we are trading within that price. We soup above it. Look how clean that soup is. Obviously you guys saw me just pick a random week, right? So this is obviously not cherry picked, but we soup above it. We have our midnight, or we have our manipulation occurring above midnight with an overall bearish price run so far. We've manipulated up, distributed down. We consolidated, continue to distribute down, manipulated up, and we're distributing down again. So in real time, you're seeing this as, okay, where can I target? How far do I think price can go for me to either hold to or to seek price or seek a trade to participate in some sort of price action happening from here to here, right? Wherever price is at the time that you're able to recognize it, because it's going to be all about how you can execute this live, right? And once you can see, okay, high of week since Tuesday has been holding. So from Tuesday, we've created an inside day on Wednesday. We created a new low on Thursday. So we have a Tuesday high and a Thursday low. Thursday trades all the way back, Friday trades back above Friday's high, which is Thursday's high. Daily highs and lows being important liquidity points, but it fails to stay above there, right? So when it fails to stay above and it closes back below midnight, again, listen to the context, listen to the narrative. We've traded above Thursday's high. We were unable to stay above Thursday's high. We are now back below current day midnight, right? TDO. So that context tells you that we've literally, just that narrative alone is that we've manipulated above Thursday's high and now we're below midnight. So you can look for distribution until where? If you're from here, you're at midnight and you say, oh no, we've closed below, then we can at least expect to hit this, realize this 4.5 from Monday, right? So seeing this on a Friday, let's say we don't realize it until this candle closes, so that would be 10 a.m. we see, okay, we could hit it. That's 163 points on a Friday. I think that's satisfactory. Obviously we move way past that. We double the range. The entire weekly range basically ends up being on Friday, But then you can say, okay, it's going past 4.5 deviations. Now where do I think it'll go? Well, you have this deviation still that can play out. This one is already ran out. And then you have your deviation from today. Okay. So again, how do you use this in live context? You can say, okay, today, in today's price action on Monday, I want to look at where do I see a manipulation above or below midnight. If it's unclear, you simply wait until it's clear. You see a clear manipulation, you draw that deviation out. As each deviation is being realized, then it should be confirmation. When you get to these 1.5, 2.5, 3.5, 4.5 levels, you are in understanding that this is where accumulation and distribution can occur. Thus, you are no longer holding for longer targets. You are now maybe trying to scalp, or you are accepting that a huge retracement can come against you for the trade that you might be holding for the long term. Okay. And if you are saying, okay, excuse me, I accept this deep retracement that can occur against me, I highly encourage all of you to be break even at this point. And at the very minimum, if you are a low-hanging fruit type of person, which I'm a 2-hour trader, once we get to 1.5, 2.5, all the halves, I'm just gonna TP. I'm one and done for the day. Okay. Now, then we move on to the next day. We see Wednesday. Okay, we're an inside day. We do have a manipulation above midnight at this point. Maybe here in the AM session, right? At 10 a.m., 11, we are targeting midnight because we haven't gone back to revisit it yet. And maybe at this point, like in this candle, we see this manipulation and we think we're going to go higher. But what happens, right? As we trade above midnight at 2 p.m. in the PM session, we immediately snap back below it and continue to close lower for the next 3 candles until close of day. So and then now you have an inside day. Now, I learned this from T Trades, but an inside day is generally a continuation of price action that has already occurred. So here we traded lower, we manipulated lower. If we have an inside day, I'm not changing to bullish after this, right? After this day has closed, I'm looking at this and saying, okay, this is an inside day. I think we're going to continue from Tuesday's price action, being that we displaced down, right? We created this huge SIBI down. So I think we're going to continue this movement on Thursday because Wednesday was an inside day. So then on Thursday, I look at this and I say, okay, do we have a manipulation above midnight? We trade above midnight, we consolidate on top of it for a little bit, and then boom, AM session comes and we have this distribution down, obviously. Now, by the time we're all probably participating, probably around mid candle here, you're gonna probably figure out that, you know, you can target these deviations from Monday. And if you don't participate in all of this, then you wait until 10 a.m. And then what happens by 10 a.m., we've reached objectives, right? So then we can accept that we are going to have a deep retracement at these accumulation levels. And or we are going to accumulate and distribute. Where are we going to accumulate and distribute? Within the range that we've already created, right? Now again, let me just pull a random level here. The current high of day to current low of day. Pull your OTE levels, and as I scoot this forward, 79% retracement. Now obviously this goes on to be souped on Friday, right? And on Friday I say, okay, I want to see more distribution down. Do we have a manipulation above midnight? I seek that manipulation above midnight. I wait for it to be clear to me. Once I can see that it is clear, then I'm going to participate in price until today's deviations, previous day deviations, or Monday's deviations to complete the weekly candle. Any questions? Is that clear for everyone on how we can use this in real time? So once your hive week is in, you can start to trade every single day in the direction of that weekly high being put in. Likewise for a weekly low, if you think that weekly low is in, you can trade in the direction of the weekly low, right? So you can say, okay, every day I'm going to be long and I'm not going to participate in shorts. Or you can say, I'm going to size up on longs and I'm going to size down on shorts. Or I'm going to hold for 5R on longs and I'm going to hold for 1R on shorts. Do you see there's many different ways that you can apply it to how you trade? If you want to trade in multiple directions, you simply de-risk when you're trading against the higher time frame direction. If you are maybe wanting to catch the daily range, then you are waiting for the opportunity for that daily range expansion to occur, meaning you're waiting for accumulation to finish, you're waiting for manipulation to finish, and you're looking to only take part in the distribution. Thursday going into Friday. Yes, so on Friday, right? You mean the narrative of swooping Thursday's high, Ali? Yeah, so okay, this is what let me not go off on a tangent. 1 second here. So on Friday, we open at midnight, right? We trade up to Thursday's high. Whether you are seeing this in real time or you get the alert, we are trading above a high, a daily high at that, right? We don't continue to distribute after taking Thursday's high. We then close below current day midnight. So from midnight, we've gone up, we've taken the high, we've returned to midnight, and now every single candle that prints from there, we are continuously below midnight. At this point, this tells you that we were unable to stay above daily highs, right? Because we were unable to stay above a daily high, and this in this point is probably some type of order block or some type of fair value gap. Let me show you, because we've taken a daily high, right? So a daily high, weekly, monthly highs, they are all very important liquidity points. If price is printing above these prices and we're unable to stay above them, and then we start closing below important daily levels midnight, that narrative alone tells you that you are bearish. So when I zoom into this, we did not body above daily high. We did not put any sort of significant volume above a daily high, right? Let me just remove this fair value gap for context. If you use highs and lows only, this is a sweep. This is the definition of a sweep, right, Ali? When we take this high, we draw it forward and you wick through it. That is the definition of a sweep. So now when you wick through it and you now close below an important daily level, today's important daily level, midnight, that context tells you alone we are unable to go higher. We will likely go lower. So now you can start to look forward to these unrealized deviations that have printed for the day, previous day, or the week, right? Now, does everyone understand that? Does that make sense to everyone? I don't want to add on too much because there's so many variables I can add on for context to make this clearer. But another really good exercise is to study highs and lows. And you can do what I just showed you there, is where you can draw a line from daily high past, into the next day, or up throughout the entire week. And then you can see how these levels are interacted with. Like I would have previous X high here, right? We sweep previous day's high, and then now let me show you on a higher time frame chart what this looks like and why I say that. So let me go to the daily. Let's see if it'll let me. Where are we here? We're on February 21st. So we are here. Okay, it won't let me. So let me just pretend we're here, right, in price action. So We haven't created the order block yet when we're trading down through this on Friday. But look at what's happened here on the daily chart. We've gone up, right? We've swept out highs. We've traded up. We're back below that high. So think about how you trade around levels. If you take a high, you got the notification that you took a high, and then the next thing you see is price is trading now back below that high. That context in itself is bearish, and it's remaining below that high. The opposite of that is when you have something where we trade above, or let me just use this context actually here. Tuesday into Thursday, right? We have an inside day Wednesday. We trade below Tuesday's low, right? Then when we trade below Tuesday's low, we come back to that low and we stay below it. That's bearish until it changes, right? Then we start to trade up. It's obvious, probably really nasty price action in here, but then now we've reclaimed Tuesday's low. We're now closing above it, and look at it. You have the retest of Tuesday's low, and we are now printing above Tuesday's low, and we are bullish from this point on until Thursday's high. When we get to Thursday's high, right, we're unable to stay above it, and now we are printing below it and closing below it. So now we are bearish again. Just using highs and lows, you can have a narrative that you can hold longer targets for. Does that all make sense, or did I make that more complicated? Trying to keep it super, super simple. Feel free to ask away, guys. Don't be shy. Great, great. All right, so let's just go. Does anyone want to choose a date, choose an asset? Do you mean like drawing it out in price? Yeah, what I would recommend is when you have your deviations set on your chart. I know it's a pain in the ass, and I know it can get really messy when you have all these deviations and lines and you don't know where what is coming from what. What I do when I'm trading, as you can see all these multiple charts up here, I have one dedicated screen for SMT. I don't know if you guys can all see this. Can't see what you guys are seeing. There we go. Yeah, you can see it. OBS cannot see it. So for those of you that may not be watching, that may not be in the Discord, this chart is labeled SMT up here, right? And okay, Vinay, I got you. SMT, I have one chart for SMT. Then I have the Kingline indicators, which I'm trading when I'm trading the 1 minute. I also am watching the 5 and 15 in real time, just because you want to keep some sort of higher time frame narrative, you know, to keep you grounded in your 1 minute chart, so that you're not just like deep into these 1 minute wicks and candles and you're completely forgetting what the 5 and 15 minute are doing. So I highly recommend that you keep them on your chart and not necessarily on another screen, because you just may forget to glance over. Okay, so now here, this is my Kingline. If I decide to be trading the Q3, like if I'm on an eval day and I want to just trade evals only, I'm trading this template here. Then I have an indicator template. This is my main template that I use to trade. So I have the ICT kill zones and pivots. I have T-Trade's fractal model on here, and I have the PO3 indicator on here as well. Then I also have like the NDOGs and NWOGs, which is these purple lines, as well as another indicator that just marks out the daily highs and lows for me. So the reason I like to keep them all separate indicators is, or sorry, the indicator that has the NWOGs and NDOGs, those are actually, that's the same indicator that marks out my daily highs. Then I also have like automatic OTE of the previous day. These are all 2 degrees indicators, with the exception of the Smart Money add-ons by TFO and the ICT kill zones and pivots by TFO. If you guys want to purchase any of these indicators, just use my code. It'll get you 20% off for all of them. Now, with that being said, I like to use these indicators set as is with using multiple different indicators specifically for the alerts. All right, so I can set the alerts on each of these indicators so that they can alert me when we've hit previous day high or Asian high and Asian low, things like that. And that way the alerts are clean. And I shit you not, when I look at just the alerts alone, previous day high hit, previous week hit, or previous weekly high, previous monthly high, Asia high, London high, what does that narrative tell you? We're hitting high after high after high. We are bullish, right? Or if I see, okay, London high taken, London high, London low taken, previous day low taken, that tells me, just reading the alerts, that we've manipulated above a high and now we're closing below lows, right? And that tells me alone we are bearish for the day. So, and you know, I'm not saying that like, oh, I'm the goddess of this. You guys have all seen me lose live in real times, right? Which indicator has alerts that you use? All of them, literally all of them have alerts. Let me just drop down here, indicator titles. Gosh, I have to update everything. Okay, so here, for example, ICT kill zones and pivots. You click on these three dots, add alert. Once you add the alert, we'll go ahead and add this together. I don't think I set my alerts for Q2. Any alert and function. And I'm just going to edit the name here because this ends up coming through as a text message. So I'm going to delete, or for me, it comes through as a text message. I'm going to delete all of this and I'm just going to leave the title of the indicator. Kill zones and pivots. Okay. And what I actually do is I put the asset if I'm setting alerts for multiple assets. So I put NQ in the front. ICT, NQ, ICT kill zones and pivots. Q2 is coming up. We're probably gonna do the rollover sometime in the 3rd week or so, maybe sooner. I'm just gonna keep it on April 5th. Q2, yeah, it'll probably be the 3rd week. Let's just do the 3rd week, and I'll set it to 1600 that day. Right, and you can leave it open-ended as well, but what ends up happening is when we have the rollover, you'll get alerts from the old contract. So I like to actually set it to contract expiration, just to be thorough. So see, as when I changed the expiration, it wouldn't let me go to where I wanted to go. So that's sometimes they set limits like that, so like the furthest out you can go. Oh wait, hold on, maybe I'm not pressing OK. 1 second. 16 set, there we go. Sorry. All right, then once you have this set to where you want it to expire, you have the name set to the way you want it to be named, you hit create, and then that will send you alerts for your everything that's hit. London high, Asia high, everything that you have set on here, it'll have it set for that. And to see what alerts they will send you, or just to verify that your alerts are on, you would go into the indicator itself and you'll look for the alerts box somewhere. It's probably at the bottom. It's not at the bottom. Alert high and low break. Click. Right, and then I guess that's it. I guess that's the only alert. It does actually do all of them though. I just don't know. There we go. Alert broken pivots. This is the one I actually use. The daily I have set on another indicator. Let me go back and reset that. So you just make sure that it's on within the indicator, and then you also set it on here. There's no reason to use the not the stat map. There's no reason to use the PO3 because the PO3 is just using your daily highs and lows or whatever time frame that you're setting. You can, if you want, like previous hour high, 1 hour dealing range high broken, things like that. I also use first fair value gap by Josh Yu. This is another indicator that tells me the context of the day. So I'll get a text saying, okay, New York low, right, from TFO kill zones and pivots. Then the next text message that will come through will say, Josh Yu first fair value gap bullish. So then if we took a low and we have a bullish fair value gap after we took that low, that indicates to me that we're bullish. Again, listen to the context and the narrative. So any alert function or call, same thing. I'll set the same exact expiration date for this current contract. And then again, I'm just going to edit this very, very long name to be first fair value gap, and I'll put NQ. Fellas, Josh Yu, TFO, if you happen to be watching this video by any chance, don't take any offense that I'm deleting your name. I love you both. Create, and then you have the alert. Okay, you can do the same thing for literally every single one. As long as there's an alert for it, you can add it. Let's do this. This is probably a good one. Add an alert for 96 cycle Josh Yu. Value. Okay, no, that's not a good one. Okay, yeah, so this you would have to choose which one, and this is hard to track. I should talk to Josh Yu about this actually. He can probably label these to be Q1 of Asia blah 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 per session, so that we can set alerts according to when Q2 and Q3 is happening. That way you know not to trade until that Q2 or Q3 is set. I'll just do one more. OHLC stat map I think is also another good indicator to have on alerts for. And for here, any alert function or call, same exact thing. We're just going to edit the name so that it's not long as heck. And then what it'll do is it'll show you the manipulation and distribution levels for the time frame that you have it set to. So see here, I have mine set to 1 hour, 4 hour, and whatever 720 is. I don't know what that is. I'm assuming 6 hours. I don't know why. Weekly, right? So it'll show you all the charts that you have selected essentially. I'm just gonna go ahead and pop that on for the sake of the demonstration. 1600, and then create. Okay, and then now you have alerts for everything. And I'm gonna have to update all of my indicators later today. It's a pain in the ass, so I'm not gonna do it now. All right, so then you have alerts, and again, as your alerts come through, you will have some sort of, so these are all my pending alerts. You'll have some sort of narrative forming. So I'll give you an example. I'll go to the log here, right? So for Friday only, okay? First fair value gap, bearish during London, okay? Next alert that I get is that we've hit 19,910. How did I pull this level? I pulled this level from the homework because we did the deviation. So 19,900, 19,910 on the yearly chart, or sorry, weekly, but previous year's EQ is 910 on the continuous. On current contract, 19,900 was previous year's EQ. This was also the daily BPR. This was also 2 deviations from the daily deviation. This was also 4 deviations from the 4-hour deviation. We called all this out on Thursday's forecast if you guys were not with us. So I get an alert at 3 a.m. that we have a bearish fair value gap. Sorry, that's not Friday. Sorry, so in this 4-hour candle, I get an alert that we have a bearish fair value gap, right? The next alert that I get, I didn't have the kill zones and pivots set at the time, is that we've hit 1910. So imagine if at the point that I got the alert for the bearish fair value gap, I'm searching for some sort of short, and then I'm targeting this 1900. All right, so back to this, we've hit 2024 EQ, and then in the PM session we have a bullish fair value gap. What does this tell me? We are likely going back to TGIF. Right, so that in alone, and just the text or just the alerts that I'm getting, the alerts are telling me a narrative based on where I'm setting these alerts. Okay, now let's take this a step further. For those of you that may not follow me on Twitter, another thing you can do with your alerts, obviously you can get these alerts just straight up from TradingView if you have them. I like to get text messages because different focuses on my phone is where I can have, you know, either TradingView alerting me or text messages are alerting me, or both.
I like to get text messages. I'm a millennial, so what you can do is you can go to your app settings, I think. Alerts. Wrong. Hold on a second. Hold on a second. Let me find it. It's gonna take a second. Profile settings. Let's see. Profile settings. There we go. Here. Notifications. That's not what I was looking for. Hold on. Let me find it. Let me stop talking. I already did that. There we go. Alert. Alternative email for alerts. Right? So what I've done. Oh no. I gotta. Oh no. I've leaked my phone number. Okay. So what you want to do is you want to put your. I don't know if you know that you can do this, guys. I'm gonna have to cut this part out. I'm gonna have to blur this or something. I'll figure it out. But anyway, you want to put your phone number at your cell phone provider's email. You can Google this, okay? And what they will do is every time they send you the email, or every time you get an alert, it'll send it in the form of an email to your phone number at your service provider's email address. What happens there is now you will get a text message. So I've shared my text messages before from my phone. You guys all know what that looks like, but I literally get a text from TradingView saying blah, 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 blah. Okay. So, you can have the alerts not only ping you while you're on TradingView, not only ping you from your TradingView app on your phone, but you can get a direct text message that says blah, 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 blah. And when you start to look back at these text messages in the form of a narrative, like I've done here when I showed you the alerts in the log, you can start to see what narrative looks like. Bearish, 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 then, you know, levels bullish, right? So now you can see when a reversal is happening, or a reversal had happened on Friday, or you know, here March 3rd, 2.5 deviations hit, bearish, bullish, bullish, right? So we manipulated up, then we went bearish, and then we reached 2.5 deviations, right? So things like that, you can start to see how narrative forms, and you can start to even develop narrative for yourself surrounding these deviation levels, previous day highs and lows, manipulating above midnight, things like that. All right, guys, I think I'm done for the day. Any questions, concerns, comments? Was there anything that you wanted to do? We were gonna go back into more price action and just do more, but I'm ready to hop off now. I think it's a good time to call it. Sweet, Demont. I'm glad to hear it. My pleasure. Thank you, Ali. Thank you, Vinay. Any other questions? Any outstanding anything? A-trades? Do you guys want to vent? Has everyone had a good week? Honestly, between the forecast that Adrian and I did last week and this week, I hope everyone is printing, like absolutely murdering and printing, because we've done some great call outs.